Today we're talking about one of the most important places on Earth that most people never think about. A narrow strip of water that quietly controls a massive part of the global economy. The Strait of Hormuz. This small maritime passage carries roughly 20% of the world's oil consumption, moving about 15 to 20 million barrels of oil every single day, and accounting for around 34% of global crude oil trade. Which means something incredible. A waterway barely a few dozen kilometers wide helps determine global fuel prices, shipping costs, geopolitical tensions, and even inflation in your country. If this one choke point gets disrupted, the effects ripple across the entire planet. So in this video we're going to break down what the Strait of Hormuz actually is, why it's the most important oil choke point on Earth, which countries depend on it the most, and what happens if this passage ever closes. And before we dive deeper, if you enjoy detailed geopolitical and infrastructure breakdowns like this, make sure you like this video and subscribe to the channel because it really helps the channel grow and reach more people interested in global affairs. Now let's start with the basics. The Strait of Hormuz is a narrow waterway that connects the Persian Gulf to the Gulf of Oman and the Arabian Sea. This means it serves as the only maritime route for oil produced in the Persian Gulf to reach global markets. Geographically, the strait sits between Iran to the north and Oman and the United Arab Emirates to the south. At its narrowest point, the strait is only about 30 to 35 kilometers wide, making it one of the tightest and most strategically vulnerable shipping corridors in the world. And that narrowness matters. Because when such a massive percentage of global energy supply passes through a small geographic bottleneck, it creates something economists and strategists call a choke point. If anything disrupts shipping in that location, conflict, blockades, naval activity, or even accidents, the consequences can be immediate and global. This is why the Strait of Hormuz isn't just a shipping lane. It's a geopolitical pressure point. And if you're finding this interesting so far, don't forget to like the video and subscribe, because we'll be breaking down more global infrastructure stories like this. Let's take a closer look at the physical characteristics of the Strait of Hormuz. The strait stretches for roughly 90 kilometers in length, connecting the Persian Gulf to the Arabian Sea. Its width at the narrowest point is about 33 to 35 kilometers, and the water depth ranges between 60 and 100 meters, which is deep enough for massive oil tankers to pass through. But here's the critical detail. Even though the strait itself may be around 35 kilometers wide, the actual shipping lanes used by tankers are far narrower. Large ships follow designated traffic corridors to prevent collisions and maintain safe navigation. That effectively compresses global oil transport into a very small maritime funnel. Think of it like a giant highway for oil tankers, except instead of dozens of lanes, there are only a few narrow ones. And every major oil producer in the Persian Gulf relies on those lanes to move energy to the rest of the world. Now let's talk about the numbers that explain why this strait is so important. Roughly 20% of global oil consumption passes through the Strait of Hormuz. Every single day, about 15 to 20 million barrels of oil flow through this narrow waterway. But that's not all. Around 34% of the world's crude oil trade also passes through this route. And approximately 20% of global liquefied natural gas trade depends on this passage as well. That means energy supplies for huge parts of the global economy rely on a shipping corridor that could theoretically be blocked or disrupted within hours. This is why energy analysts, economists, and military strategists all watch this region extremely closely. Because when the Strait of Hormuz is stable, global markets stay calm. But when tensions rise here, oil prices can spike almost instantly. The Strait of Hormuz is not just another shipping route. It is the largest oil transit route in the world. Every day, tankers loaded with crude oil leave ports across the Persian Gulf and travel through this narrow corridor toward Asia, Europe, and North America. With 15 to 20 million barrels moving through daily, no other maritime choke point carries more oil. And this gives the strait unmatched strategic value. Energy markets depend on uninterrupted flows through this region. Even small disruptions, such as attacks on tankers, naval exercises, or temporary shipping slowdowns, can cause immediate volatility in global oil prices. That's why every major power monitors the Strait of Hormuz closely. Interestingly, the countries most dependent on oil flowing through the Strait of Hormuz are located in Asia. China is the largest importer of oil passing through this route. India is another major importer that relies heavily on Gulf energy supplies. Japan receives roughly 75% of its oil imports through Hormuz, while South Korea receives about 70%. In fact, these four Asian countries, China, India, Japan, and South Korea, together receive about 69% of all oil exports passing through the Strait of Hormuz. That means energy security for much of Asia is directly tied to stability in this small maritime corridor. And when tensions rise here, Asian economies are often the first to feel the shock. So why exactly is the Strait of Hormuz considered such a critical choke point? First, it is the only sea passage connecting the Persian Gulf to the open ocean. There are no alternative maritime routes. Second, its narrow width, around 30 to 35 kilometers, makes it vulnerable to blockades, military activity, or accidents. Third, the strait sits in the center of the world's largest oil-producing region, surrounded by major producers like Saudi Arabia, Iraq, Kuwait, and the United Arab Emirates. And finally, any disruption here has immediate global consequences. Oil markets respond within minutes to news coming from this region, which is why the Strait of Hormuz is often described as the single most important energy choke point on Earth. The Persian Gulf region surrounding the Strait of Hormuz contains some of the world's largest oil infrastructure. Saudi Arabia, through Saudi Aramco, operates the largest oil company on the planet. The United Arab Emirates exports massive volumes through ADNOC facilities. Kuwait Petroleum is another major producer, while southern Iraq contains vast oil reserves and export terminals. Together, these producers account for a huge portion of global oil supply. And almost all of that energy must pass through the Strait of Hormuz to reach global markets. There are some pipelines that bypass the strait, but their capacity is limited compared to the massive volume transported by tanker ships. The strategic importance of the Strait of Hormuz has been demonstrated repeatedly throughout history. In 1973, the Arab oil embargo triggered a global energy crisis and caused oil prices to surge dramatically. During the Iran-Iraq War in the 1980s, the region experienced the so-called tanker war, where shipping vessels were attacked and oil transport was heavily disrupted. Oil prices became extremely volatile during this period. In 2012, Iran threatened to close the Strait of Hormuz in response to international sanctions. And in 2019, several oil tankers were attacked in the Gulf, again reminding the world how vulnerable global energy supply chains are. Every crisis in this region has triggered immediate economic consequences worldwide. Today, the Strait of Hormuz remains a region of intense military and geopolitical activity. Iran's Islamic Revolutionary Guard Corps Navy frequently conducts operations in the area. Missile tests and naval exercises have also taken place near the strait. Meanwhile, the United States maintains a strong naval presence in the region, often deploying carrier strike groups to deter threats and protect shipping lanes. This constant military activity highlights just how strategically important the region is, because controlling or disrupting this waterway would have enormous global consequences. When disruptions occur in the Strait of Hormuz, the global economic impact can be immediate. For example, short-term disruptions in 2025 caused oil prices to spike by about 6%. More recent tensions in 2026 triggered a price surge of roughly 14% in global oil markets. Higher oil prices then cascade through the global economy. Fuel costs increase. Shipping becomes more expensive. Inflation rises. And economic growth slows. This is why energy markets react so quickly to any news about potential disruptions in the strait. You might wonder whether there are alternatives to the Strait of Hormuz. There are a few pipelines designed to bypass the strait. Saudi Arabia operates pipelines that transport oil to the Red Sea. The United Arab Emirates also runs the Abu Dhabi crude oil pipeline, which has a capacity of about 1.5 million barrels per day. But here's the problem. Combined pipeline capacity is only around 3.5 to 5.5 million barrels per day. That's far below the 15 to 20 million barrels per day that normally move through the Strait of Hormuz. In other words, there is currently no realistic alternative route capable of replacing the strait's capacity. A recent example shows just how quickly things can escalate. During the 2026 crisis, tensions in the region led to a major disruption in shipping. Traffic through the Strait of Hormuz dropped by around 70%. More than 200 ships were stranded, unable to move through the corridor. And oil prices surged by roughly 14% almost immediately. Even vessels belonging to major trading nations like China were affected. This crisis demonstrated how fragile global energy supply chains can be when a single choke point becomes unstable. Looking ahead, the Strait of Hormuz will likely remain one of the most important geopolitical locations in the world. Energy security for many countries still depends on stable shipping through this corridor. At the same time, tensions between regional powers and global military presence mean the risk of disruption will always exist. Some countries are investing in strategic petroleum reserves and alternative supply routes. Others are accelerating the transition toward renewable energy. But for the foreseeable future, the global economy will remain deeply tied to the stability of this narrow waterway. So the takeaway is simple. A narrow maritime corridor in the Middle East controls a huge portion of the world's energy supply. About 20% of global oil consumption depends on the Strait of Hormuz. There are few viable alternatives. And any disruption can immediately affect global markets, shipping costs, and economic stability. This is why governments, militaries, and energy companies all watch this region closely. Because when the Strait of Hormuz stays open, the global economy keeps moving. But when tensions rise there, the entire world feels it. If you found this breakdown useful, please like the video and subscribe to the channel because it really helps support the work we're doing here. And let me know in the comments if you'd like more videos explaining the hidden infrastructure that keeps the global economy running. Thanks for watching.